And gold today, oh my goodness, fresh all-time high for gold, 37.82 as of right now. Gold just continues to run. Let's take a look at silver just real quick. Silver futures, 44.36. Oh my goodness. So yeah, $50 is the next stop for silver, it looks like. Just going straight up here. And these moves out of the S&P, out of gold, out of silver, I don't think this is good because the moment that this corrects, even by a couple of percentage points, what does that do to Bitcoin? So we better hope that the S&P just continues to hold on to these gains here. Let's hop into the report and let's see what's going on through the rest of this month. And please feel free to jump in and interrupt me, ask questions, comment, whatever at any point. I want to see if we can get through some of this here. Okay, we are definitely sitting at overbought levels, but markets can remain overbought longer than you can remain solvent. So I wouldn't necessarily be stepping in front of this train trying to get short. Although I do have short positions open, they're a hedge. I'm still net long. So yeah, the S&P is definitely sitting at an overbought level. We can see that if we take a look over here at SPX, and then I just throw up an RSI with a 14 period here. So a reading above 70 is in extreme overbought territory. Now, this is a daily. The reading here right now, as of today, is sitting at 74.64. So well above 70. And every time we get above 70, there is some type of correction here. So looking for some type of correction, maybe 2%, 3%, something like that, something. So um, I've been asking myself this question. I know that a lot of us have been asking the same thing. Where is retail when it comes to digital assets? We haven't seen any real euphoria. We haven't seen any, piling in of retail longs into Bitcoin, ETH, or any digital assets, really, not really this cycle. So where is retail? Well, I would submit to you guys that retail is buying Tesla and buying Nvidia using zero DTE options. It seems as though retail is not buying ETH. It seems like retail's buying tech stocks using a bunch of leverage in the form of those 0 day to expiry options. So definitely retail mania for tech stocks, not yet for digital assets. So 10 straight green days for retail, just big inflows. But these inflows are into like really speculative products, really risky, high risk products. If you're trading 0 DTE options, there's a ton of risk there. Definitely seeing these warning signals, right? There are some parallels to the 2000 dot-com bubble. There are some big differences though. But there are a lot of parallels that you would be remiss if you didn't at least mention them. So just because these tech companies, generate a ton of revenue, doesn't mean that they generate a ton of revenue to justify the hundreds of billions of dollars of capital expenditures. Um, so that's something to think about. Now, the Fed rate cutting cycle, we're seeing these non-recessionary cuts, and this has historically been very positive for markets 6 months out and 12 months out. So it seems as though, the whole idea of a recession is, we've probably been technically in a recession for a long time, but, maybe it just isn't possible anymore. Yeah, when the Fed cuts with markets at all-time highs in a non-recessionary environment, 6 and 12 months out, markets have always been much higher. So that is, something to just think on for a moment that 12 months out, we should expect things to be higher. There are definitely some positioning concerns, though. AI is a crowded trade. Everyone is allocated to these, Mag 7 tech AI names. Leverage is at the 100th percentile, which means the highest it can possibly go. That's where leverage is at for some of these crowded AI names. Um, and this is an interesting stat. So, I've seen this, in a handful of places over the last couple of days. At SPX, the S&P 500, RSI, above 45 for 102 straight days. The stat that I've seen is when you see that 2 weeks later, the S&P has always, 100% of the time, been lower. But, we're talking lower by a couple of percentage points. Remember, markets don't usually crash from all-time highs. I don't expect any type of crash out of the S&P at all. Um, I'm just hoping for some type of a cool off period because it can't just go straight up. If it goes straight up, then there will be a crash. I'm hoping that we can cool down for a little bit. You can't go up every single day without there being some type of unwind. So, um, yeah, I'm thinking, into the end of this month that hopefully there's some type of, little correction that presents a buying opportunity. We're seeing that in Bitcoin and in alts right now. Um, so definitely quite a bit of divergence. There are certain sectors of the market that are performing extremely well, and others that might you might want to avoid for the time being. So we can take a look at that sector divergence there. Now, the end of September into October for the stock market is seasonally the highest volatility period of the year. You tend to have in September, October, this period of time, this is when you've seen all of the big crashes. In 1987, that was what? It was October 11th or something like that, Black Monday. In 1929, I think the crash began in September. In 2008, there were crashes in September. The really, really big volatility has almost always come in September and October. And that's for the stock market. But for Bitcoin, at October and into November, that period has been the best, period of performance for Bitcoin.